gentlemen, good day and welcome to KEI Industries Q4 FY2024 earnings conference call hosted by Monarch Networth Capital. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Dani from Monarch Networth Capital. Thank you and over to you, sir.
Yeah, thank you, Manuja. Good afternoon, everyone. On behalf of Monarch Networth Capital, we are delighted to host the senior management of KEI Industries. We have with us Mr. Anil Gupta, Chairman and Managing Director of the company, and Mr. Rajiv Gupta, CFO of the company. We will start the call with opening remarks from the management and then Q&A. Thank you and over to you, sir.
Okay. So, thank you, Rahul. I'm Anil Gupta, CMD KEI Industries Limited. I welcome all of you to this investors conference call of KEI Industries Limited. So, first I will give you a brief of the results and outlook, demand outlook of the industry and for the company. Net sales in quarter 4 of FY2023-24 is has been rupees 2,319.27 crore with a growth in the net sales is 18.76%. EBITDA is 259.72 crore and the growth vis-a-vis the last year is 24%. EBITDA net sales margin is 11.2%. Against 10.7% in the same period previous year. Profit after tax in this quarter is 168.79 crore against rupees 138 crore. Growth in the profit after tax is 22.2%. So the profit after tax net sales margin is 7.28% versus 7.07% last year. The domestic institutional sales of wire and cables is rupees 676 crore against rupees 692 crore last year, and the sales of extra high voltage cables is 220 crore in fourth quarter against 99 crore in the previous year same period. Export sales in this quarter is rupees 257 crore. The growth in the export sales is 57%. So the total cable institutional sale contribution is 45% as against 47% in the previous year. Sales through distribution network, that is B2C, was rupees 1,056 crore in fourth quarter against rupees 845 crore. The growth in this B2C sales is 25%. The company has achieved total B2C sale of 46% of the total sales in fourth quarter as against 43% last year. Sales from EPC department other than cable is rupees 192 crore as against 135 crore. Growth is approximately 42%. Out of the total sales of EPC, EHV EPC sale is 50 crore as against 65 crore in the same quarter last year. Stainless steel wire division has achieved a sale of 56 crore against 63 crore last year. Volume increase in the cable division on the basis of production for the consumption of metals in Q4 of 23-24 as compared to previous year is 24%. Now I will touch a little bit on the full year results. The result summary of financial year 23-24. Net sales in FY23-24 is rupees 8,104 crore. So we have achieved a growth of 17.31% over full year period. EBITDA achieved is 886.55 crore with a growth of 20.81%. EBITDA net sales margin is 10.94% against 10.62% previous year. Profit after tax in financial year 23-24 is 581.05 crore as against rupees 477.38 crore in the last year. The growth in PAT is 21.72%. PAT net sales margin is 7.17% as against 6.91% in the whole year. Overall, the growth in exports achieved is 58%. The PHV
PHV 622 crore versus
extra high voltage cable is 622 crore against 336 crore previous year. The growth is approximately 85%. Sales through dealer and distribution network is 3,770 crore. Growth is approximately 19%. The total active number working dealers of the company as on 31st March 24 was 1,990. The B2C sales has contributed 47% in FY2023-24 as against 46% in the previous year. EPC sale for the full year is for 562 crore as against 405 crore last year. Growth is approximately 38%. The pending orders booked as on 30th April is approximately 3,531 crores, out of which EPC 771 crore, PHV cables 374 crore, cable from the domestic market 1,865 crore, and export orders pending are 521 crore. So the total becomes 3,531 crore. India Ratings and Research has affirmed its long-term rating as AA with positive outlook. ICRA and CARE long-term rating is AA stable. Short-term rating from India Ratings, ICRA and CARE is A1+. The book value of the per equity share of the company is rupees 348.87 as on 31st March 24 as against 287 as on March 31st, 2023. Now, total borrowings of the company is 134 crore against mainly for channel finance 97 crore and cash and bank balances of 700 crore as on 31st March 24 as against total borrowings of 135 crore of channel finance and cash bank balances of 537 crore as on 31st March 23. Acceptances creditors as on 31st March 24 is 506 crore as against 219 crore previous year. During FY2023-24, finance cost was 43.91 crore as against 34.71 crore last year. Capacity utilized during financial year 23-24, 92% in the cable division, 71% in the house wire division, 90% in stainless steel wire division. During the year, the company has incurred a total capital expenditure of approximately 397 crore, in which Chijpada, Silvassa rupees 84 crore, Pathredi in Rajasthan 51 crore, Sanand rupees 197 crore, and a plot of land at Kheda in Gujarat 9 crore, and other plants, existing plants and rupees 56 crore. Company is continuing is capital expenditure for brownfield capex at Chinchpada to further add capacity for wires and cables in next 1 to 2 months. We will further spend rupees 65 crore. Another greenfield brownfield expansion is going on at Pathredi with approximate cost of rupees 125 crore, which will increase the capacity for LT power cables approximately 800 to 900 crore per annum. It will be operational by end of June 24. We have already spent rupees 74 crore and balance will be spent within next 3 to 4 months. This brownfield capex will enable us to grow by 16 to 17% in the current financial year, as well as the next financial year. Apart from the brownfield capex in FY2024-25, company has planned rupees 900 to 1,000 crore capex on greenfield expansion for LT, HT and extra high voltage cables in Gujarat. Commercial production of which will commence by I think by first quarter of 25-26. We have already started construction in FY23-24. Further, we will be spending 500 to 600 crore in the next financial years to complete the project to maintain a CAGR of 15 to 16% per annum as in the coming next 3 to 4 years. Demand outlook remains strong. We are very bullish on our demand in the markets in India as well as from our export customers. The major demand drivers from India are solar power projects, power distribution projects from this RDSS scheme, and other reforms in the government power distribution utilities. A strong capex in the transmission and distribution, and as well as in the power generation sector. We have noted that a substantial investment is being done in next 3 years on enhancing the thermal power generation capacities, and also pump storage power projects coming up in various parts of the country.
Combination of solar
and real estate demand continues to be strong, and the demand from construction sector and other infra projects continues to remain strong. So thank you very much, and you can now ask any specific questions, and we'll be very glad to answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
Sir, thank you for taking my question. So my first question is if you can talk about the export opportunity. I mean, the numbers that you are talking about in terms of order stability is very significant, 50% growth. So if you could talk about, where exactly is this coming from? Second, how sustainable is this in the sense that, why is it that you as a company or India as a country is getting these export orders on cables and wires? So some information related to this would be helpful. That would be the first question.
Pulkitji, first of all, world over, especially in the Western countries and other parts of the country, the demand in infra projects in solar, power transmission and distribution is, as well as oil and gas sector is very bullish. In Western countries, the new manufacturing capacity is not coming. In fact, even existing capacities, whatever there are also not fully utilized because of the manpower or because of the high cost of inputs like power and other factors. Secondly, these countries are definitely looking to add one more potential country as in their supply chain other than China, and that also is and the kind of political relationships our country has built up with many all the Western countries, that is also helping Make in India brand now to go in that direction. Thirdly, in last several years, we have built a strong, a network of agents and marketing network to promote our products in many countries. Also, country-specific certifications in Europe and USA has been taken by our company, which includes UL's underwriters laboratory approvals in USA and many construction protocol approvals in Europe, which are country-specific, and specific type tests on the cables required in several countries we have done from our plants, which is helping us to enter into those territories. It is a journey. It has been a journey of several years. It is not that suddenly this demand has come up. We have been on this track, which I've been explaining in my several conference calls in earlier years to our investors.
No, very, very encouraged to hear what you just said, sir. So second thing, we've seen a very, very significant increase in copper prices in a very short period of time. I mean, while they were inching up slowly, gradually, the last sort of 2 weeks, the price increases are pretty significant. How should we look at that from the perspective of the near term, i.e., does it destroy demand a little bit? How do we handle that with the channel? If you could just talk about the significant increase in copper prices and its impact in the immediate term.
See, demand, this is an essential sector of the economy, and the projects which are being constructed or nobody can stall it for the want of raw materials for more than a month or so. And we have not seen any stalling of demand even till today, because all the projects are time-bound. Government infra projects are time-bound. Any delays in execution leads to penalties and LDs to the contractors. So maximum they can delay the purchase by 15 days, 20 days or a month, but not beyond that. So, and we have seen a healthy order booking even in the month of April also. So these fears are not right. Secondly, we are keeping adequate metal booking and stocks in our plants to take care of our existing orders booked, and all the raw material increases we are passing on to the customers in the new tendering. Many of the orders in our order book are already having inbuilt price variation clause. So if you recall, this cycle had come in end of 2020 as well as 21, and it had not impacted our margins even at that time.
Sure, sir. Thank you so much for those answers.
Thank you. The next question is from the line of Bharat Shah from ASK Investment Managers. Please go ahead.
Yeah. Good morning, Anilji, Rajeshji.
Good morning, sir. Good morning, sir.
Good morning. Just one question. given the kind of macro scenario that exists as a backdrop, infra, power projects, constant build-up of the new power projects in conventional renewable energy, real estate, construction activity, and in general, almost rebuilding India's industrial and manufacturing kind of a setup. That is what kind of a picture we are undergoing. So given that backdrop, what is the picture you would visualize for 5 years ahead in terms of growth rate for the overall industry opportunity and for KEI in particular, both in the industrial as well as household, and kind of improvement in capital efficiency or otherwise, led by margins or otherwise? If you can draw up a picture as to how do you see the coming 5 years. And secondly, would you describe the period ahead probably as one of the most significant ones in the history of KEI, or it is that I'm putting words in your mouth? So I want to hear whether you as one of the industry leaders, do you believe that the period ahead is probably the most defining one for this industry in the longest time, or it is just my imagination?
Thank you, Bharatji. I think you have asked a very significant question. First of all, I see a very strong and good future for our industry. It is mainly because the way economy is growing and the way government is pumping in, capex in the economy, and resulting into large amount of private capex, which is now coming up in the manufacturing plants, like semiconductors, like many building industries like steel, cement, and miscellaneous packaging industries. Everything will lead to more and more demand for wires and cables, because for any manufacturing project or infra project, power is needed, and this power can be carried only by insulated cables. And more houses are built, more and more buildings and factories are built. Lighting drives the demand of wires. I think next 5 years will be very strong defining period for our manufacturing sector, and will establish the country in becoming a huge manufacturing hub. We are all building up, and also for our company, the kind of capex we have embarked upon. We have spent 400 crore in 23-24 on capex, and expected to spend around 1,000 crore in this financial year, 24-25, and another 500 to 600 crore in next financial year in our existing plant, greenfield project coming up at Sanand near Ahmedabad. So this will enhance our capacities to take care of coming up demand from these sectors: infra, power, manufacturing, and construction, including real estate. And we also wish to build up our huge customer base from overseas geographies, so that we want to diversify our geographies to insulate the demand and our company from any twist in the demand cycle in any particular geography. So this has been the idea, and I think that scalability is very high. Even till now, India's manufacturing capacity for wire and cables is not more than 12 or 15% of China. So I think we have much bigger population and we have, much better, approach towards international markets. So there will be a substantial opportunity in next 5 to 10 years in India as well as for our industry for export markets.
And on capital efficiency is business, as you mentioned, that scale-up would occur. Opportunities to do so are already visible. You're preparing yourselves for it. You earlier mentioned about copper price, that it really doesn't change anything on a longer term because it's a bit of a pass-through. In keeping in mind all of these, how do you see the capital efficiency improving or otherwise over time? Will it be margin-led? Will it be scale-led or both or any other factor?
No, it will be both. As the scale goes up, capital efficiency improves, the money turnover improves, and also, it leads to little bit reduction in overheads also because we are allocating same overheads on a larger production. Capital efficiency, I think we have ROC
27.4%.
27.4% is on return on capital employed, and I think more than 20% on return on capital. So I think year on year we are improving this capital efficiency, and as our scales are going up.
As we have earlier guided, Bharatji, that after the implementation of the new projects and increase in the retail prices, retail sales and exports, we will be adding another 1 to 1.5% in EBITDA also by financial year 27 and 28.
Ji. All right. Thank you and all the very best.
Thank you, Bharatji.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Nidhi Shah from ICICI Securities. Please go ahead.
Hello. First of all, I would like to congratulate you on a great set of numbers. Most of my questions are regarding, say, market share of KEI and industrial, and basically, what do you think of exports? So, in terms of exports, what geographies are you mostly targeting? Where do you see maximum growth for cables, especially for industrial cables? And currently, what is the market size of industrial cables in our country, and how do you see that growing over the next 5 to 7 years?
Our major export markets are Australia, and now we have started significant exports to United States as well as Europe, and already we have been doing good amount of exports in Africa and Middle East. Middle East is our substantial market for last 15 years. We are very much entrenched in their oil and gas projects, especially in Abu Dhabi, Qatar, Kuwait, and Oman, where major oil is there. And also we are doing exports in adjoining countries like Bangladesh, Nepal also. What was your other question?
Market size of the country.
Market size of the
more than 8,000 crores.
So market size at the moment is around, wire and cable industry is around 75,000 crore, and we think that it will keep on growing by 15% year after year, the market size.
This is a combination of like household and industrial cables, both together.
Correct.
Would you have, say, a bifurcation in mind of where that could be in the years to come? Like which one would outweigh?
I think both will grow equally, but I think, in my opinion, the cables will grow faster.
Okay. Okay.
Because that's
Thank you so much.
Production, no?
Mm-hmm. Thank you.
Thank you. The next question is from the line of Naman Parmar from Nivesha Investment Advisor. Please go ahead. Mr. Naman? His line got disconnected. The next question is from the line of Rishi Kothari from PI Square Investment. Please go ahead.
Yes, hi. Thank you for the opportunity and congratulations on the good numbers posted. So my question is related to the dealer distribution that we generally operate in. So if we see, we have seen a good growth amount in the dealer and distribution market. So how exactly are we, targeting the dealers and distributors? We know that more or less the market is fixated, but the only way to, increase the market share is to take from the competitors in a way, more or less. So how exactly are we giving them USP in that terms that makes us a good dealer distributor compared to any other place?
Basically, for the dealer distributor market, we are targeting a growth of approximately 20% with respect to wire as well as the cable, because more and more geographies we are strengthening now, and more new manpower we are deploying in the southern part and the eastern part of the country. So that's how we are able to grow our dealer distributor business. And we are strengthening our existing dealer strength also, because we are appointing as well as we are exchanging from the weak hands to the stronger hands in the areas wherever it is required. As Anil has said, the industry is growing well because of all the factors in our favor. So that's why the growth is also here. That's how we are taking the market also.
But also, what differentiates you from any other competitor by, is there something in terms of margins that you provide them that makes you stick with that dealer or something else sort of a thing?
Sir, it is the approvals with the various end users and also the our brand strategy, the stocking of wires and cables in our depots. We are stocking at around 26 locations, and also our strong sales teams across the country, which are reaching out to the customers, and business development activity we carry out.
Okay, so in terms of the footfall towards our customers, in terms of dealers, is quite strong compared to our competitors.
Yes.
Okay. Yeah. Thank you for the opportunity.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Sangeeta from Cogito Advisors. Please go ahead.
Hi, this is Andre Purushottam, her husband and partner. First of all, Gupta ji, congratulations for a great set of results. You are making this a habit.
Thank you, sir.
Thank you.
One is that your PAT growth has been slightly slower than your EBITDA growth. So can you understand why that is happening, and how do we see this in the next year going forward?
Actually, year-on-year basis, our EBITDA percentage will also grow as well as the PAT percentage also grow, because this year also the PAT has grown by close to, it was 7.28% versus 7.087%.
Right.
The PAT is also growing. Sometimes the financial charges little bit increases because of the bank guarantees we are providing on a large orders.
Right.
So that expense is booked in the same quarter actually.
Okay. So it's just a minor variation here and there.
So in future, as we earlier guided that we will now towards crossing the 11% EBITDA margin and crossing the EBITDA margin of, PAT margin is more than 7%. So now we will be marching towards the 7.28 to 7.4 kind of thing percentage. So like in year-on-year basis, we will be improving in our EBITDA as well as in our PAT margin.
Right. My second question was this China plus one play, which you referred to in your answer to another person who was on the call. Can you give me some flavor as to what is happening? Are you getting inquiries from companies who never dealt with you before and dealt with Chinese suppliers before? Or is it happening that you are dealing and competing with Chinese suppliers, and despite the fact that you're not the lowest cost, you're getting the order? Can you give us a flavor of the kind of conversations that is happening? And going a little bit behind the surface to understand the psyche of your buyers, and how is it that you are actually getting advantage of the China Plus One strategy?
See, especially one factor is that we have been working on this approvals from certification bodies in USA and Europe for last 3-4 years. So right. that has come on board. Secondly, we are the customers are whispering that they want to develop one country apart from China, whom they think is a significant one in their supply chain. You already know that the political relationship of China with USA and many countries are not very good. So ultimately, that position is reflected in the large companies which are procuring products from China, and they definitely wants to secure their supply chain and don't want to risk themselves due to any political uncertainty.
So what is happening? Are you getting inquiries from people whom you didn't deal with before? Or are you hunting them?
Yes, we are getting inquiries, but inquiries can be converted into orders only if we are having technical certifications in those countries and sales network in that country. So these two things are very important. Even if we are getting an inquiry, there is an existing supplier of that country.
My last question was, your B2C component of sales has been increasing, but now it is increasing at a slower rate. So should we assume that it will saturate somewhere around 50%, 55%, or do you think it can go for more than that?
I think our aim is to reach it to 50% of the total sales, and beyond that, we would like to maintain our direct sales to the customers as well. So our company believes in maintaining large customers to be direct.
Okay. Thank you, sir, and congratulations once again, sir.
Thank you.
Thank you. The next question is from the line of Manoj Gori from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. And sir, my question is with regards to your B2C business. So if you look at probably over last few quarters or probably last 6 to 7 quarters, we were seeing industry was seeing largely some pressure from the real estate-led demand. Are we seeing any signs of revival? One of the players who has already reported the numbers, they indicated over the call that we are seeing some signs of revival with the real estate-led demand. Any insights over there?
Revival, I think our numbers are very clear that we are having good sales to the real estate sector. So I don't know, what revival comes, there was a dullness.
So my question was more specifically on the industry side, because obviously KEI has been doing extremely well, and probably this is not limited to a year or two. I've been looking after the company for the last 8-9 years. But just wanted a sense on the industry front, probably, how we are looking at the thing.
You see, the real estate sector is growing, and as we are hearing and we are witnessing that all the metro cities, wherever earlier that 2 years before the real estate demand was not there, so now these demands are there, and new projects are coming in these metro cities, and they are being sold out also. So this kind of demand is already there on the ground.
Okay, sir. Thanks. So my second question would be on the capacity. So probably last year for a few quarters we did see some year, given the visibility that KEI is having on the demand front, we have ample capacity and probably we don't see any challenges over there.
So, Manojji, we have added the capacity last year, which will be resulted last year also, and in the current year also, we are still adding and we are going ahead with the new. If you go by the volume number, we have grown by more than 22% in the last financial year in terms of volume. Because prices may go up, prices may go down. That's why whenever we guided you about the top line, we always the conservative numbers, so that we have guided earlier 16-17%, but finally we have grown by 17-18%. In the current year also, our growth rate will be close to 17%, and that can. And by the time for the next financial year, the new capacity of the Sanand project will be available. So our overall target to grow year-on-year basis 17-18%. That's how we are increasing the capacity.
And this 17-18% would be in value terms, right?
Yeah, in value terms, definitely.
And so how do we see the margin?
You see, the volume may go up, volume may go down, prices may go up, prices may go down. So we have to discount for that actually.
Right. And so how we see the margin versus FY24 level?
Yeah, margin is close to 11%, and we will be maintaining close to 11% margin in this year also.
Right, sir. Thanks a lot, sir, and wish you all the best.
Thank you, Manojji.
Thank you. The next question is from the line of Gaurav from IIFL Securities. Please go ahead.
Thank you for the opportunity, sir. So specifically question on the EHV cable side. So what sort of demand we are seeing on the domestic and the international side, and what sort of inflows we can expect in next 2 to 3 years specifically on the EHV side?
See, our present capacity is close to 600 crore per year of the EHV cables, and I think we have fully utilized it last year. So this year also it will remain the same. Because the new capacity is coming up only at Sanand, and it will take close to 24 months from now. By end of FY25-26, that new capacity will come up. So we will be able to grow this only after 2 years. One, because this is a heavy project and it takes time to bring that capacity. The construction is already started.
And so specifically, if you could talk about the demand, like is it more likely driven by the domestic or the international side?
I think we have seen the growth in both the sides. Of course, because export base was low, so the percentage growth in exports last year has been 58%, and this year also it looks to be strong. But domestic also grew by 19%. So I think that, and it more depends on where we are allocating our capacity. Demand is there at both fronts.
Okay. And so you mentioned about foraying into US market with these cables and wires. So are we in any progress with do we have a tie-up with local EPC player there where we can actually supply? Is there any development on that side?
Yeah, first of all, let me tell, we are only selling cables over there. We are not selling any wires. Okay. And it's not a tie-up. These are the customers which we have developed who are, placing their orders on us. So, I don't think there's a, I don't know how do I define tie-up?
Actually, we are serving directly customer in our export market all over the world.
And they are mainly EPC contractors or direct users.
Okay. Sir, lastly, one or two bookkeeping question. I missed the order book bifurcation. If you can just please highlight the same.
So we have order book is EPC division is 771 crore rupees. Extra high voltage power cable order book is 374 crore rupees. And our domestic market cable order book is 1,865 crore. and our export cable order is 521. So overall order book is 3,531.
Okay. Okay, sir. And sir, if you could just highlight the A&P spends during the year, like what was the percentage and what trajectory we are expecting going forward?
Every year we are spending around 50-60 crore rupees. So last year we spent around 49 crore rupees. Again, this year we will be increasing little bit, 4-5 crore rupees extra. So year-on-year basis, little bit we are increasing depending on the sale which we are increasing.
Okay, sir. So thank you for the opportunity.
Thank you, sir.
Thank you. The next question is from the line of Harshit Kapadia from Elara Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity and many congratulations for good set of numbers, sir. Few questions. Just to understand, on the demand per se, are you seeing any sector additions which has been something new sector which you can highlight, which you have started supplying your cables to? Is there anything new in that that would be helpful?
What is showing you actually? Sector additions are basically although we have been I don't think that all the sectors we are covering all the sectors even for many years now. So oil and gas, industry, steel, cement, power generation, transmission and distribution. At the moment, I'm not able to make out any specific sector addition we have.
So these sectors are already there because whether you talk of infrastructure, capex or real estate sector or the other power sector, it is already there actually.
Yeah, I was referring from the point that there could be, new things like EV charging cables or data.
Yes. You are right. Sorry, this I forgot. We have added EV charging cables in our portfolio, and this is a sector addition in the last financial year. We have already started production and commercial sales of EV charging cables.
Okay. And there was also a plan that you want to get diversified into other consumer electrical segment. And given with the current demand scenario, both on domestic and export side, do you think you would want to continue at this point in time, or you may want to relook at it probably 4 years?
As of now, because we are doing the heavy capital expenditure, so we are not planning any diversification. Rather than we are stick to our product range, but we are adding the markets over there, new geographies over there.
Understood.
And whatever addition of the product in the cable, that will remain the same. That we will be continuing.
Understood. And so last question is on the EPC side. We have seen, earlier there was an EPC cycle boom, and then we had refrained from getting into EPC projects. Now again, power demand is rising. We are seeing a lot of transmission substation orders being coming out. Do you think you want to again re-enter that particular?
No, EPC project we have already reduced to the level of 5-6% of our total business. That we will be maintaining actually.
That you will be maintaining.
Whatever new orders are coming in on EPC side, we will be gained by supplying our cables to those EPC contractors.
Right. But you won't enter into as an EPC player, right?
Not in a significant way.
Understood, sir. Fair enough, sir. All the best, sir. Thank you.
Thank you. The next question is from the line of Praveen Sahai from PL India. Please go ahead.
Yeah, thank you for the opportunity and many congratulations for a good set of numbers. So, sir, my question is for a full year last year, if I look at your housing wire and welding wire segment has delivered a very strong number, and also if I look at incremental revenue, you had generated a maximum out of that actually. So, as compared of your, the LTSP cables actually. So, for the way forward, do you believe this run rate of incremental sales to continue? Because this is largely, in the cable versus the wiring. So, where you will see in 25-26 this incremental sales?
See, we have delivered higher numbers in wires because first we had the capacity. Secondly, our base numbers were lower than compared to our immediate big industry peer group. Thirdly, we have tapped into a lot of newer areas in the country where our dealers were not present by expanding our dealer base. And fourthly, because there was a capacity constraint in the cables in the LT and ST side, so the chances of higher growth was limited because of the capacity. I think these were the major reasons that we have seen higher growth in our wire segment.
So, just to clarify further to that, your capacity, especially in the cable, is coming in for 25 and 26. So, would you able to maintain your wire contribution of a 30% around in your total pipe, or it will reduce?
No, it is not like this. It is basically whatever capacity we are adding and we are having, we will be utilizing that capacity, whether in wire or in cable. And accordingly put together all, we will grow 17-18%. You see, sometimes the wire grow more, sometimes HV grow more, sometimes export grow more, sometimes domestic grow more. So it is always the allocation of the capacity depending on the order which we are having.
Okay. And next question for your guidance related to the export to grow at a 50% and overall growth of a 17-18%. That gives me a lower growth at the domestic number actually. So as the domestic industry also you had said a 15% growth rate. So would you match this 15% of industry growth or would be a lower?
No, we are not talking of we are talking of the industry, but we are also talking of the company also. Because whatever capacity we have created or we are in the creation of capacity, only to that extent we will be growing. So whatever we are growing, our future growth target is growth to at least 17% CAGR for next 5 to 10 years, because in the last 15 years, we have grown at a pace of 14%. And our peer group also has grown to the level of 14-15%. So we are talking of the longer term horizon, not for 1 year or 2 years.
Okay, got it. And that is a mix of export and domestic you are talking about. Yes, long term.
See, for us, whether sale comes from domestic, sale comes from export, sale comes from the retail, it is not the matter. The matter is how we are utilizing the capacity and we are improving our working capital cycle. So that is the main thing for us.
Got it, sir. Got it. Thank you and all the best.
Thank you, Pradeep.
Thank you. The next question is from the line of Kondanya Nimmagada from Jefferies. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Sir, I just want to reconcile the capex numbers. You spoke about Chinchwad and Patre, these are 65 and about 50 crores for FY25. What is the expected capex for Sanand and total capex, sir, that you are looking for?
Close to 900 crore plus capex will be for the Sanand project in the current year, because we need to complete the phase 1 for that project.
And the project will commission by FY25 or FY26 first quarter or last quarter, so I was little
maybe in the so basically the first quarter of the 25.
Okay, so next year you will be spending close to 1,000 crores of capex.
No, current year we will be spending around 900 crore to 1,000. Next year will be remaining portion of 500 crore to 600 crore only.
Okay, understood, sir. And sir, sorry, my line got disconnected. Can you repeat the capacity utilization numbers, please?
Capacity utilization was 92% in our cable division and close to 70-75% in the wire division.
Got it, sir. Those were my questions. Thank you very much and all the best.
Thank you. The next question is from the line of Naman Parmar from Nivesha Investment Advisors. Please go ahead. Yes, Mr. Naman. The line from Mr. Naman is not appropriate. The next question is from the line of Sandesh from HSBC Mutual Fund. Please go ahead.
Hello, sir. Can you hear? Am I audible?
Yes.
Hello. Hi, sir. Thank you for the opportunity. Sir, I wanted to ask how has been the volume growth for the quarter and the full year? Can the entire growth be attributed to volume or there has been some price hikes also in this? full year and for the quarter?
Price was less. So the volume growth in the Q4 was 24%, but volume growth for the full year was 22%.
Okay. That's it, sir. Thank you. Thank you so much, sir.
Thank you.
Thank you. That will be the last question for the day. I will now like to hand the conference over to management for closing comments.
So, I thank you very much to all our investors for participating in this conference call. And if you have any further questions, you may reach out to us. Thank you very much.
Yeah, thank you very much to all.
On behalf of Monarch Network Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.